The record is on.
Thank you.
Okay, so we were talking about price traps,
Yeah.
and I was explaining how I start looking for them. And I'm only looking for them on the pound dollar because that's the same pair we're trading, and I've tied these accounts to one of my live accounts so I can make money while I'm teaching. So, because last year I kind of hurt myself a little bit because during all those lessons I didn't trade my own account.
Yeah.
So I'm not. This year I'm a little bit smarter. So I usually start at the 1 hour chart. And my reason for going to the 1 hour chart is because I'm looking to get a large enough candle so I can make some pips on the breakout, but small enough so I'm not taking an exorbitant amount of risk. That's my personal preference. And I like what I call normal size candles, as I mentioned yesterday. I don't like these oversized candles. And not for a price trap. There's another thing that these do, that's another system. When we get to individual candles, which we haven't done yet and should have been there already. But when we get to individual candle types, I'll get into these larger candles and how they're traded. But um, in this particular case, I would ignore this giant candle, even though it is a price trap, only because my risk would be so high. It's 42 pips there, and if I keep looking inside here, eventually I'll see a smaller and smaller and smaller price trap until I get right here. And this would be my trade, would be this candle right here. The next two candles did not close above the high or below the low. And again, the key thing is that these two candles did not close above the high. They did not close below the low. That's where I put my box. And in this case, my stop loss is 14 pips. And that looks even better when I have glasses on. So put those on. Okay. So in this case, my risk is 14 pips, and my take profit is usually twice the size of the box. Okay. Um, and that's what I generally like to go for. Uh, Now, Kumar was saying that what he's discovered and what has worked for him is when he gets a large candle like this and it becomes a price trap where the next two candles can't close above the high or close below the low, he looks to trade the breakout of this large candle in the direction of that candle itself. And he usually tries to uh, place his take profit at about half the candle or 20 or 30 pips, I guess, depending on what the chart looks like at that time. Am I accurate with that, Kumar?
Yes, Lou, that's right.
Okay, good. Now, he asked if he was doing something wrong. My response to that is no. He just found a way to take the concept and tweak it to fit him. You follow me? And I've said many, many times that a trading system should fit you the same way a tailor fits you for a suit. So a little tweak that he does I might not like doesn't really matter. This is not about egos, it's about cash. All right? Being able to make the money you want out of the market. So the price trap concept is powerful and it really does work well. Um, and Kumar found a way to tweak it to make it fit him. And there's nothing wrong with that. So don't let anybody sway you off of it or scare you away from it. All
Where do
right,
you have your stop loss though, Kumar?
Kumar?
The other side, box top, if it is sell, yeah, if it is a sell trade, I put that in the box top. So it's on the other side of the candle.
Yeah. You got that, Daryl?
No, that was Mike actually,
Oh,
Lou. No, I didn't hear properly because I mean on those large candles, like you say, you've got an awfully big stop loss, haven't you?
right. And again, my personal preference is I like to buy my melons at the best possible price.
Yeah, yeah,
And that's personal. So keep that in mind. I'm not saying it's a rule, and I'm not
yeah,
saying it's a rule for
yeah,
everyone, and I'm not saying you're wrong if you choose to do something different.
yeah, yeah,
I want to
yeah,
be, really quite clear about that.
yeah, 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 yeah,
All right.
yeah.
Um, and I was mentioning if people have a hard time finding price traps, what you could do is go out to a higher time frame, and let's go out to a daily in this case. And what you're going to be looking for is an inside bar.
Yeah.
Now, does everyone understand what an inside bar is? If you don't, say so.
There's a lot of varying definitions of that though, Lou, isn't there? Some people talk about just the body of the candle. Some people like to see the wicks fully engulfed by the previous one. People have got different views on what's the real definition of a inside bar.
I agree. I agree that there are different definitions. I'm going to give the definition that I use specifically for price traps.
Yeah.
And also for wedges, because you can find both the same way. I'll take this candle here. Well, that's not a great one. I'll take this doji here. The definition of an inside bar, the one that I like to use, is when the entire candle, and that includes the low and the high, when the entire candle is inside the prior candle.
Yeah, I like that definition.
All right, that's a definition that I like.
Yeah.
Now, there are two different things you can find with this. When you see this inside bar, if you like trading wedges, well, then what you do is you draw a trend line across the top.
Yeah.
You draw the trend line across the bottom, and I promise you, when you go down to a lower time frame, you're going to see a bunch of candles in here making a very nice wedge.
Yeah.
So this is the inside bar. So now I'm going to go to I'll go to a 15-minute, and when we come back and find that wedge, you'll see 15-minute might have been a little bit too soon, I think. Let's go out to like a 30 then. Oh, there it is, right here. So this is that wedge we drew. You follow me? From that daily candle. So now that we found it, what you do is you clean it up on the native chart. So you clean it up down here, and then you look to trade the break of the wedge.
Yeah.
Follow me? Mm-hmm. Now, how this helps with price traps is that I'm going to go back and redo the lesson on wedges again because we're going to be working with longer term trades. As you get closer to the end of this wedge, you stop getting larger candles. In the back of the wedge, as you see here, you see the size of this candle?
Yeah.
Once the wedge, you will never get another candle this large as we approach the inside of the wedge. Okay? Now, because you're getting smaller candles and smaller candles as you approach not the apex, the point of the wedge is another name that escapes me at the moment. You will get a number of inside bars, a number of price traps like this white candle here.
Yeah.
Okay, or this black candle here.
Yeah.
All right. You will see a number of them as you approach the point of the wedge because you're running out of real estate here. You got me?
Yeah.
So it's another way of finding some price traps if you have trouble seeing them with the bare eye. You know what I'm saying? And here's an example here I wanted to point out in how I would do certain things. You see this doji here is a price trap to these candles.
Yeah.
However, this next candle, it also became a price trap. So I'll skip the doji and I'll move over here.
Yep.
And then this candle became a price trap. So I'll skip that and come over here. And now we end up with this candle. And this candle gave me a better price trap with a better stop in the whole bit.
Mm-hmm.
So that's what happens. When you find a large candle, you can keep looking inside that larger candle. And eventually you will find a price trap.
Although that wasn't favorable, was it?
This one?
Yeah, yeah.
This price trap.
Yeah.
Yeah, that would have been yes, absolutely.
Less, yeah.
Yeah, but again, nothing is 100%, and my risk was only 15 pips.
Okay.
So I could live with that. You follow me?
Yeah.
So with the price trap, that's the one thing I do is I continue looking into smaller and smaller traps. All right? And I prefer to find a price trap at the bottom of a run, like at the bottom of this, Over here was a good price trap right in here. You see we had a nice significant run down. And then this white candle would be our trap right here. Okay. And then our entry is here, and this white candle is 15 pips, 14 pips. And that went almost twice, but we certainly would have gotten your break-even point, your 15 pips out of that. So that's one of the things I do like to see is a significant run and then a stop. And then price consolidate a bit after the run. All right. And usually I like to trade with the trend. But now in this case, I would have put more emphasis on the short trade or a larger lot size on the short trade than I would on the long trade, because the long trade is only going to be a pullback because the evidence on the chart is telling me that we're currently in a downtrend. You got me? So I'd go a half a lot long, a whole lot short. Make sense?
Yeah.
No, let me take that back. I don't want to say make sense, but did you get the concept?
Mm,
All right.
yes.
Because again, the only thing you can manage, the only thing you have control over is what you put at risk. All right. And I hope I'm not talking too fast. I'll know when I review this later. So in essence, that's what I look for with price traps. So now, if it's the end of the day, let's do the 1 hour chart, and let's just run down a few pairs. Let's look at. Oh no, I have. Wait, hang on a second. I have this 4 hour euro that I'm still waiting on. You see that? That's the long there.
Can I call your attention to a pair?
Sure.
Okay, and this is something you mentioned yesterday, and this is the Aussie dollar.
Oh, okay, good. Let me minimize this. I don't want to mess that up. Minimize this. Aussie dollar, and was it a naked chart or what were we looking at on it?
Yeah, naked chart's fine.
Oh,
Maybe
chart. Okay, Aussie dollar.
Yeah. And
oh, I should have a black and white.
Yeah.
Yeah. All right. And what was it we were looking at? Blah, blah, blah.
Okay. If you let me see here.
I'll give you control.
All right.
That's Daryl.
Yes. I mean yes.
Okay, go ahead.
And don't call me Goathead. All right. So all right. Let's check the chart here. All right.
What time frame was it?
Yeah, 1 hour is fine. Let me see here. Let me get a minus. Okay, what we got here? Bit of bang, boom. Okay. Oh, all right. Okay. This one. Wait a minute, is that what I'm doing here? Yeah, okay. And let's see, what did I have? I think I had this one here. No, that's not it. Hold on, let me look at my chart.
Okay.
It's here to there to there. Okay. Yeah, that's pretty much it. No, I used this one right here.
Okay.
Okay, so now I'm going to go to a 15-minute, and you can see the price action better. So these are the two main trend lines. It's coming down. This was coming down. It's about. But this on the 1 hour is the main. Right.
Pivot.
Okay. Is the main pivot. So. So actually, this happened before this was established as the main pivot. But I mean, you could say this was the main pivot. Anyways, it worked well down to there, and then it had a bit of a a bit of a bounce, not much when it came back up to here, but then it came right back down. bounced off of here, and then it actually penetrated this one fine the first time, but then bears came in enough to bring it back below there, bounce off there, and then came down somewhat. Came back up here, bounced down, up, and then actually it paused on the 5 minute. You can see it much better. It paused when it came back down to here. So anyways, that was what you were talking about, is using multiple trend lines to maybe help you in and out of trades.
Yes, I'll show you a couple of examples of that. I found my students, one of them, I have to get all of their folders because all the students had to write their own trading book. And Abraham and I spent a lot of time refining some stuff, so I saved his book. But the thing I wanted to point out about the trend line, so you have this trend line here. If you remember, when you draw the multiple trend lines like this over the dominant pivots or the dominant fractals,
Right.
when price breaks one trend line, it tends to move directly to the other trend line. And that's what happened in this case. We broke this trend line to the long side, and price moved right up to the next trend line.
Yeah.
Okay. Here we broke this trend line, and in most cases, you would want it to move all the way down here. It didn't do it, but you could see once we broke the trend line and then retraced, and this is my test, by the way, of a fake breakout, is I don't want to see, so let me talk about the fake breakout. Here you see the close above the trend line here. I want to make that larger. What's going on? Oh, I got this thing on. Here you see the close above the trend line. And a lot of people say, oh, it's going to go long. And I don't jump on that. I wait for the next candle. I want the next candle to come back and test this line, but not close below it. If this next candle closes below it, then I know that this close above is a stone cold fake. Perfect example here. Price close above the trend line. Oh, let's go long. No, wait for the next candle. The next candle close back below that trend line. This was a fake out. Now, what you pay for in this is impatience, because you have to give up that 10 minutes or whatever the candle length is to make sure you're right. You follow me? And then the conservative way of trading it would be, once this candle tests and closes here and does not close below the trend line, if you're super aggressive, you enter at the trend line. That's super aggressive. If you're a moderate, you want the moderate entry would be a close above the high of that black candle. You got me?
Right.
Yeah.
Yeah.
So, and if you go back and look through these charts, you'll see what I mean, how like, okay, this closed above, the next one didn't, but this is a warning candle, obviously. So you can see that this is an indication, and that's why I wait for this next candle. This is an indication that this puppy may turn back. Because remember, all of this candle body is inside this. Usually I like to see the candle body up here in the wick.
Yeah. And there's a price trap as well, isn't it?
Yeah, well, and a price trap, correct. Oh, that's really good that you're starting to see these, you know, and you see where they're occurring. So that's my key for these breakouts when they break these. I want to see the next candle come back and test it. Doesn't have to touch it, but it's got to come back, and let's see if this is valid. Because if you remember from basic support and resistance, right now, this line is the ceiling. Okay? Once we crack through the ceiling, this line should act like the floor. And it did. Okay? It stopped here, came back, touched it perfectly here. Okay? So once we break that, it becomes the floor. All right? Let me just look for another one. Here's one where price closed above the trend line. Okay, we're back above the trend line. Let's go long. No, look what the next candle did. The very next candle came right back underneath the trend line. That is a fake out. And that's what you have to wait for. If you want to be super aggressive, then you enter right there. But your odds of getting a fake become much higher. All right?
Yeah, and then these trend lines are somewhat subjective because everybody doesn't have the same broker.
True. They should generally have about the same highs.
Yeah, generally.
And usually that's why, when you see me draw an Uncle Lou trend line, I will, like I may, uh, I may do something like this where I bring this trend line down here to catch these closes.
Uh-huh.
You know what I'm saying? Now, in this case, the way this shaped up, I would have brought this right out to here anyway. But normally when you see me draw, or particularly support and resistance, I'll go to the last dominant close. That to me is much, much more important than that actual high. If I wanted to do a fractal breakout, and we'll talk about those later. I found my list, by the way, so if you hear me mention stuff, that's where it comes from. This is a fractal, and
Yeah.
what's important to me is the last dominant close, which is there. So if I put a trend line across here, or a horizontal line, you'll see
Yeah.
we had 1, 2, 3, 4, 5 candles, all within a pip or two of this point.
Yeah.
This is the dominant price, not that. You got me?
Yeah.
Because everything stopped there. And just quickly, if you want to do a fractal breakout, once you know this is a fractal and you get a trade below this low, then boom, you're off to the
Yeah.
races.
Yeah.
That's essentially a fractal breakout. There's a
Yeah.
couple of other rules to it, but and that's also a pretty decent system too. That gets overlooked a lot. So now if I extend this is the beauty of this. If I extend this trend line out, I wouldn't be the least bit surprised to eventually see this price come down to hit this. Someone's making popcorn in the back.
That would be me.
Okay, so it's 1, 2, 3, 4, 5. I wouldn't mind seeing 6, 7, and 8, and then maybe look at stochastics. Just throwing that out there. All right.
Yeah, that chart's that when we were waiting for you, Lou, Darren and I were looking at a price trap on that Aussie dollar on a 5 minute actually, but
Oh, okay. Let's go take a look. Was it here?
well, I got Heiken Ashi candles, so it's slightly different, I suppose, on mine.
Oh, well,
to,
I can just put the Heiken Ashi on so we can see it, or I can let you share your screen, either one.
well, you can't with me because I'm on this web thing, which for whatever reason doesn't work. I don't know why that is.
Oh, okay.
Yeah.
Where
Anyway,
the hell is-
don't worry about it, Lou. It's not a problem. You could see it on the 15. Well, you could see it on the 15 minute anyway. I think.
All right, let's go to the 15. Oh, right here.
Yeah. And
Oh, yeah, that's beautiful.
it was a beautiful. It was because on the Heiken Ashi candle on the 5 minute was only 15 pips.
Mm-hmm.
And there were a lot of little price traps within the big price trap because it went on for about 30-40 candles.
Right.
Yeah, but once it broke, it's done nicely, hasn't it?
Yeah, yes, it has.
Yeah.
So it just happens to be one of my favorite. We got 8 in a row, by the way. I don't know how this euro dollar one's going to work out, but we got 8 in a row with the price traps. So that's good. It's good that you can spot it. We had one up here, this black candle.
Yep.
All right. We've got one here, this black candle.
Yep.
Right there. So I mean, they're I like them. They work quite well. Now, if we adopt this same principle and we go out to, let's say, a daily chart, and which is where we were before, and when you're looking for long-term trades, I'm going to get rid of these lines. I should just hit backspace. Okay. So now, as I'm looking at this, well, it's gone already, but we had a nice price trap here on that daily. You see that? I can draw a box on this. I don't have anything on it. So see that's a nice daily price trap. And it's 136 pips. Now on this broker, by the way, when you see me use the crosshair, that the middle number is the real number. You got that? On InstaForex, this broker, the middle number is the real number of pips. It doesn't have the decimal in it.
Oh, okay.
Yeah, on this InstaForex. And I've got like not really great spreads, but I use this for longer term trades because the spreads aren't that big a deal when you're looking at a couple hundred pip run. Okay, we have a twin tower here, we have a twin tower here, we have a twin tower here. And again, on these dailies, the nice thing about it is when you go to the daily, you look for what looks like it could be a trade. So here we have a twin tower here, possible, but you come back at the end of the day and see if it looks like a twin tower. If it is, then you place your a trade below the low and a trade above the high. Okay. The other thing here, well, we don't really have it. We got a bit of a bear flag like that, and then copy this. See that? Okay, and if this bear flag breaks, it should move a distance equal to the width of the original flag, and I'm just going to eyeball it. You got me? So if it breaks this, it should come down to here, but it'll actually be over here somewhere.
Yeah.
Okay. So that's another one you can set up a decent trade for. So I just want to run down a few pairs and just see what you're seeing. So we're on daily charts now. So let me go here. All right. So what do you see on the daily? Now, your silence is actually a good thing
You've got
because
an inside.
there's
You've got
really
an
not
inside
much
bar
there.
A few back, haven't
Well,
you?
can't trade that.
No,
That's a
not
profit.
now.
That's about
Not
to break.
now.
Yeah, so I'm saying if you look at this right now, what do you see? And the fact that no one said anything is actually a good thing because when you look at a chart, if you don't see it, move on. Don't
You've got a
start
price trap there, haven't you?
right here, this big one.
Yeah.
Yeah, but that's
The big black candle.
this one.
Yeah.
But well, again, Kumar would trade this. I wouldn't.
Yeah, no, I'm saying, yeah.
So like here, I don't see anything.
Yeah.
Follow me? So I want to see something that says, aha, I can see that.
Yeah.
Okay, so now I see an aha on this one. Does anyone else see it?
Yeah.
What was that, Kumar?
Can see a wedge.
There you
Yes.
go. Perfect.
That was
A wedge. Okay.
Would we call that price trap at the bottom there?
Yeah, but we can't trade it. You're talking about this?
Yeah.
Yeah, well, it's gone. You know what I mean? We've already closed above it right here.
Yeah.
yeah.
So
it's the wrapping fish right now.
It's a what?
That newspaper is being used to wrap fish right now.
Oh, yeah. Exactly. So, okay, that's a wedge. So I'll put that on the list to come back to it later. You know, that's kind of the approach you take. All right. Dollar CAD. I don't see anything really like, wow, there's an ugly wedge.
Yeah, it's an ugly one, isn't it? Yeah.
Right. And, I'm not much for it's, okay, so I'll pass. And like I said, I'm looking for something that says, yes, right now, this is ready to pop. And it takes we did this already.
Yeah.
It takes so little time that it's well worth the money. And I'll explain the mathematics in it, which is relatively simple. If you're trading for, let's say you're trading from 8 in the morning until about 1, which is average for a lot of day traders. They usually put about 5 hours a day on the chart. And let's say you make $200 for the 5 hours. All right. So if you divide the $200 by 5, you're making about $40 an hour. Am I correct?
Mm-hmm.
Okay. So now if you took 15 minutes and ran down 10 or 12 charts and you found one pair, let's say, oh, I love this because this tells me there's a weekly price trap. So I'm going to go up to the weekly. And there it is.
Yep.
See that?
Yep.
So now I'm going to go up to the weekly. I'm going to mark this. So now, how long did it take me to actually find that? Let's say it took me 20 minutes. Took me more like 20 seconds, but let's say 20 minutes. And let's say out of this, when the trade kicks in, that's 300 pips. I'm looking at a minimum 300 pip run either up or down. So
Yeah.
now if I take the 20 minutes, and 300 pips would be $3,000. You got me?
Yeah.
So now if I take 20 minutes and divide it by $3,000, how much am I making per hour?
Yeah.
You get what I'm saying?
Yeah.
So this is worth the time to do it because your payoff on a per hour basis is really, really good.
Yeah.
Okay. Let's go to Euro Chef. A lot of people, sometimes don't take that into consideration. I know. Well, all the chefs are going to have that
Yeah. Yeah. I know.
giraffe on it.
You're on a weekly time frame there. That's why, isn't it?
Yeah. But we got a nice wedge here.
Yeah.
And remember what I said, as you get closer to the apex of the wedge, you don't get big candles anymore.
Yeah.
And we've got a price trap.
Yeah.
You follow me?
Yeah.
So I'll mark that price trap. And then I can come down to a 1 hour and get a closer look. And then in a 1 hour, I'll see if there's a price trap in the price trap.
Yeah.
I got to squeeze this in a little bit more. Let's go to a 4 hour. And then open this up a little bit. This thing here throws the scale off.
Yes. Chucked all the charts right out.
Yeah, it makes it tough. But inside here, I'm looking for a price trap inside here, let's say. Or I'm looking for the next move to either the top or bottom of the wedge.
Mm-hmm.
All right, let's move on. Euro pound. And again, I'm looking for the obvious price trap.
There's a beauty in the pound dollar 15 minute.
Let's go back there and take a look. Pound dollar 15 minute. Well, and again, I'm looking at longer term because
Never mind.
no, but I want to take a look at it because the more you see the pattern, yeah, right here. Yeah, that's a nice one also. That's what you're talking about. Am I correct?
Yes.
Yep,
Okay.
that's the one.
Yeah, so that's a nice one. So again, as you go out to the daily and the weekly, now the weekly is I have a Friday set up. So I'll go to the weekly chart and let me just do that, and we'll start from the bottom up this time. So we're looking at different stuff. So on the weekly, I'm looking for something that I can set up and then I can hold it the rest of the week. Okay, the simplest one is a simple long above the high of the prior candle, short below the low of the prior candle. That's the simplest way to go. Okay, and these can pan out very, very nicely. There's another method from way back in the day where you turn this into a line chart. Let me just set this up for a second. Let me put the period separators on. I'm glad these are recorded because sometimes I get in that kind of groove sort of thing. What am I looking for? Oh, period separators. Let me just do this. Okay, so here we have these period separators, and this is a 4-hour chart. Now I'm going to blow this up a little bit. Then I'm going to turn this into a line chart. And what they do with this is you look for where you can draw a wedge or horizontal lines only using the line charts. So in this case, this is what we'd have. And I'd look at these on Fridays. So now at the breakout of this on that 4-hour, the goal is to hold this for the rest of the week. You got me? Or until you get your number. All right, so if I go back here, I don't really have a good one here. The only thing I have here would be this, a break above that. You see that?
Yeah.
Because you can't really, this is an ugly one to draw here this way. But once you put them in, and this should be done on a separate chart so it doesn't really confuse you. And then you have your profit targets out here that you want to take. You follow me? So you'll either get, this must have been 100 pips. Yeah. You can shoot for 50 or 100 pips and get out. You follow me? Or choose to hold the trade all week. And with the understanding that if you come back to one of these lines during the week and break below it, you'll take the trade the other way, as long as you weren't stopped out. Similar thing here. This is what you would have here. You don't have much on the bottom, but you'd want to put the bottom in anyway, because they don't really connect. But if you get below this trend line somewhere during this week, you'd want to take that. See what I mean? You'd want to take this short here, and this was another Friday.
Yeah.
All right. So, and the reason you use a line chart is that you don't need the overkill of the candle information.
Mm-hmm.
You just need the pure pricing information. So now if we turn this back into candles, you'll see if you were looking at this from a candle perspective, you may not have even seen this. You got me? Because there's so much other information in here. But by making it a line chart, you're simply looking at simple price movement. And this becomes much easier to see in that respect. And then you have your lines out and you can use them the rest of the week as a guide. So if I come back to this particular Friday, this is what I have. I've got these two peaks I can put in here, and I've got this that I can put in here. You follow me? And remember, I'm doing this on this side of the line, not this side, because this hasn't formed yet. This is the start of the week, or it started the H4 rather.
Yeah.
At the start of the week. So I'm looking at that H4, and I'm looking at what can I draw through this barrier on the H4. All right, and let's go back to another one. And we're going to go here. It can't be 10 o'clock. I didn't unplug my phone. That's I know what that is.
No, it's not 10 o'clock.
Yeah, so we go here, and then we have this. Okay, and the key is if you're going to do the weeklies, you want to extend these lines out so that somewhere during the week, you may get this trade to go short.
They come into play, yeah.
Exactly. So, and again, this should be done on a separate, I shouldn't say separate chart, but a separate profile. All right. So if you want to come to your weeklies and then you come back to your weeklies, you can see what's going on. And you can even mark these price points on your regular charts once you know that, once you have them laid out. I need to slow down. We don't really have anything good here except this point to this point. And you want to draw, 2 points that you can connect like that. So a break across here, you'd want to go short. Okay, stop losses on these will always go out at your swing highs and swing lows, by the way. And this is why you want to make your lot size small. So as this thing starts to move, you can always add into the trade and never increase your risk. Okay, we don't really have much of anything here at all on this one. There's really nothing here, even though it ended up being a good week. But realistically, if I'm looking at it right here and I go back, I have really nothing to draw except, well, not even. Maybe that, but that doesn't even play into hand. This might be the only thing you could draw would be right here across these two. So you don't have anything. And if you don't have a clean look, what's the rule?
Move on to the next one.
That's it. Very simple. Just next. Keep going. This, you've got this peak and this peak like that. Right across. Right there and right there. All right. Or the other way you could do this too. And we're going to practice this on a Friday, even though it won't be the end of the day for us. It'll be a good thing to practice so you can see what it looks like. And then you can monitor it during the week and see how it panned out. All right. The only thing we have here is just this peak on this side. So you put a horizontal line there and you want to go either above or below it. We broke out to the downside, came back to hit it and closed back through it. And so we would have had a loss in here. You got me? Because if you play this all the way out, when we went, oh, let's put the candles in. Well, fake out. You wouldn't
Yep.
have
You wouldn't
now
have taken the trade.
yeah, now that the candles are in, you see that's a
Yep.
stone cold fake out. Okay, okay,
You
good.
wouldn't
We
take
broke
it.
up. We're going to go long. Okay, prove it. And it failed. That's why I wait for that candle. That's a perfect example of why I wait. But now you see the value sometimes when you don't need all the candle information to set up your chart. You don't need all that information because you won't see this. You get me with the candles in it. Now that you've got that line in the sand, now you throw your candles in to help you look for entries. Make sense?
Yep.
All right. And that was pound dollar, but we can do this with all the pairs, and you'll see that it's a very, very simple way of setting yourself up, and it's usually on the 4-hour chart on a Friday, or most brokers don't do the Sunday candle anymore, which is good. So you can do this either Monday morning when you wake up, look for what you can draw that Monday, and then lay your lines out. All right, and then hold them and keep them through the rest of the week. All right, let's go back here. I just want to see what today's would have looked like. Okay, so this is it. So now I'll turn this to a line chart. Okay, so we got an obvious, these two guys here and these 2 points here. You see how I'm trying to find 2 key points? Or you could do it this way. It depends on you. You could do it like that. So you'd either be entered here or entered here. All right, and now if we throw the candles in, now we see the breakout. Here's the retest. Price came back to it, but did not close back below it. I'm comfortable now taking the short.
Yeah.
All right, and because it's a 4-hour chart, we're still in this trade, and we're up 100 and something pips, which you could easily say, you know what, I'll take my 100 and walk away.
I would.
Yeah, absolutely. And then when you're in here, you look for your logical take profit points, and that's and exits are on my schedule also. How to find exits, because entering trades is easy, but there are a lot of really key ways to get exits. But in a case like this,
there, though, Lou, can't you?
what's that?
You can see the obvious exit there, can't you?
Well, the obvious one for me would be these 3 points.
Yeah,
and what I was going to say was you're looking for a place where at least 3 candles all hit the same price.
Yeah.
That would be here.
Yeah.
That would be obvious number 1. And if price keeps going, this would be obvious number 2.
Yeah.
1, 2, 3, 4 candles.
But it's it bounced perfectly off if you drew a line under those 3 candles. That's where it bounced perfectly, isn't it?
Yeah. And again, the dominant close, not the wick.
Yeah. Yeah.
That's the key.
And that's where it's bounced off.
Right.
So,
exactly.
So that was a clear exit there.
Right. And we will discuss exits because that's the area that gets a lot of people in trouble, not knowing how to get out of a trade. Price trap, a beauty too. Boy, a price trap after a breakout.
Yep.
That's you gotta love that. All right, so you got the idea. Now we will go back to this again when we talk about setting up the weekly trade. Okay. But I just wanted to give you just an overview of how that's done. You go to a 4-hour chart, you put your line separators on, you turn it into a line chart, and you look for peaks that you can draw trend lines through. If you don't have a sensible upward peak, then you can go with a straight horizontal line like that across this high, or you can draw a bit of an ugly wedge. Well, not really. You're drawing more of a conventional wedge, actually. You're drawing it through here, and then you're connecting these bottoms like that. These two. You see that? And you're looking for the breakout out of this wedge. Stop loss at this swing low here. Put the candles in so you can see it. You see, breakout there, stop loss there. Okay, you took some heat, but you weren't stopped out. But you see how different it looks with the candle information in it? and
Yeah.
you wouldn't be able to see this breakout point with all that extra detail. So that's the overview of it. You're looking to be able to draw some sensible lines. This one's pretty easy to see, and I'll take this tool to do that. You go across here, and then you can bring this down. Make a channel. See that? The breakout, the stop, and you hold it, for the rest of the week unless you break one of these lines or if you get your number. All right. And again, someone, I guess, still has control. All right. And the other thing you'd want to look at with this would be your weekly, daily range. Okay. When you go to your pair, look at what your weekly. Oh, go ahead.
Yeah. One of this breakout one. So you go down to a lower time frame, is it?
Um,
To see where it,
boy, it's really difficult to hear what you're saying. Try again.
on the price breakouts. On the price breakouts.
I can't hear either.
Yeah, I can't, and I really want to hear the question. Could you perhaps type the question, and we'll wait a few minutes and come back to it.
All right. But it's based on the GU, yeah?
It's hard to. Is that
We
Nancy?
can't hear you, Nancy.
Yeah, did you buy your microphone at Toys R Us?
Let me increase the volume.
See, these questions are important.
Yeah. But we can't hear you at all now, Nancy.
Yeah.
You can't.
Oh, that's good.
That's better.
Okay. I popped up the volume.
Oh, that's it.
You're pretty tech savvy.
Okay, go ahead.
Do I sound clearer now?
Yes.
Yes, very, very, very good.
Okay. I was saying, you just mentioned about the GU breakouts.
About the what breakout?
On the breakouts.
Of this or of this?
Yeah, the previous one.
This
The
one.
one down here, that one. Yeah, I was saying, you have a breakout. It's that you go to a lower time frame, see where price retests it, and then you take it down.
Okay. What I heard, Nancy, was when on this breakout you could go
Yes.
to a lower time frame.
Mm-hmm.
Yes,
Yeah.
you certainly could. Oh yeah, the sniper trade is always in play. But
Okay.
what I'm just showing you right now are just ways to find longer term trades that don't take a lot of time. You don't have to look at a bunch of bats and Gartleys and flying squirrels and all that sort of thing.
Elliott waves.
Yeah, right. And some people are not really good with the Elliott waves and all that, and some people aren't into astrology. And this is real simple. It can be done on any platform. That's the other thing. Remember what I look for. I want something. Let's say MetaTrader goes out of business. I got to
Yeah.
go to NinjaTrader or someone else. This will work there also. So that's the key, because maybe you didn't hear the story, but I bought a $5,000 software set many years ago when I very, very first got into trading.
Mm.
And what I realize now was that the software would take the data from the market and crunch it and show it to me in two lines that looked like moving averages. So I never really knew what the market was doing, and I never knew what this software was measuring. You got me? I was trained to learn how to read the software, not learn how to read the market, which is two different things.
Yeah.
And lo and behold, damn company went belly up. So $5,000 plus the $5,000 I lost almost $5,000 in that trading account. And flying back and forward to Florida for their training session. Oh, forget it.
Wow.
Yeah.
Wow.
No, I mean I paid my dues. I didn't go to
Yeah, I know.
college, so this is my college education.
Was that the big light system, Lou?
I'm not mentioning any names.
Well, I'm taking that as a yes.
Yeah.
He could tell you, Darryl, but then he'd have to kill you.
Yep. Yep. So I've tried to find things that are universal. So every platform has a MACD. Every platform has a stochastic or an RSI, that kind of thing. This one is fairly obvious. You got these 2 points right here. Okay, and if you're looking for a breakout long, the only logical thing, if I put one here, they become parallel. So you can either, oh no, I see it. You would come down here like that. That would be your break point. Then this would be for later in the week if price comes back in this again. But hopefully you've made your money by the time you got down here. Okay?
Okay.
And that's all it is. You just do it on either a Friday or do it on that Monday. And you'd have to do it when your broker starts their new day, by the way. Because by the time you roll into Monday morning, there's a whole bunch of candles are gone. You could still do it, but you may be late to the trade. You follow me?
Mm-hmm.
All right. So this is another very, very simple one. I've seen it before, but I haven't seen it with the couple of twists that I think would make it effective. All right. Now I wanted to show you that spreadsheet we talked about yesterday. Now this is one of my students. His name was Abraham, and my whole thing is money management. Protect your capital, and I'll drop this in the room. I still need to refine it a little bit. The firm where I was working, the two partners couldn't get along, and they went their separate ways. And this particular guy flew in from Mexico to New York to study with me, and he had to go back to Mexico. So we never had a chance to really tweak this and make it look pretty and all that stuff. But I'm going to show you his journal. And where you see the green, those were all profitable trades. Where you see the pink was where it was a losing trade. But if you see pink and green together, it means he pocketed some profit and then moved his stop to break even. So where you see pink and green, the pink is actually the break even stop. And you see it's 0,
Yeah.
0. Okay. And if you see pink with no green, that means he actually lost that money.
Yeah.
You got me? Now, the way this was set up was he laid out what system did he use. And, I taught him wedges, reversal areas, trend channels, 1, 2, 3 pattern. So he'd scan all the charts, and if he'd seen, you see all the different pairs. He'd scan the charts and say, okay, I see a nice wedge on this particular pair, and he'd lay out the wedge, put in the setup and all that, and that's what he would do. And then he'd chronicle it on in the spreadsheet. So if we go further back, you'll see that he's had one legitimate loss, and everything else was a break even. Okay? And the other thing I want you to see is look at his lot size, 0.1, 0.01, 0.04, 0.02, 0.02, 0.06. And again, if the trade looked good, you bump your lot size up a little bit. All right? And now someone showed me how to do this. I hope I don't mess this up, where I would highlight all of these. I don't know how to do this. But you can, there's a way you add all of these up.
If you drag
Yeah,
and
use-
scroll,
yeah,
use
use
the
the Sigma.
Say that again? Wait, let me give somebody control. Who knows how to do it?
Yeah, I'll do that.
Who's that?
Kumar.
Who?
Kumar.
Oh, Kumar. Okay, so I'm going to give you control, Kumar.
Okay.
And then there's a way you drag across, you can add all of that up.
Right. So basically, so we can add here. I mean, we can see the results here in this cell when we click the Sigma.
Oh, okay. So there, you see he made $342. Okay, trading 0.6, 0.01s, and you see as he got more confident, he bumped his lot size up, and they were all 0.6s toward the end. In the beginning, when he wasn't sure, they were, small lot sizes. Now, the other thing that I want you to notice here is that this is from June 15 to June 30th.
A 2-week period, yeah.
Yeah, so $342 trading .01s and .06s, .04s.
Pretty good.
All right. So
Wow. Lovely.
yeah, so if you have a small account, don't think you can't make money. And I guess brokers want you to think that so they can get you to put more money in the account.
Mm.
But you can certainly do it. And all of these were long-term trades, by the way. These were done. I don't think he has the time frame or the hour on here, does he? Open date by the lot system. No, he doesn't say here if it's a 4-hour trade or a 1 hour. But now I'll show you his homework book. This was his trading plan here. Wait, let me just scroll down a little bit. And oh, here we go. All right, so I'll slide this over. And this was his homework on the. Now he wrote all of this with my guidance, but he did all the work. So I said, okay, you have to. Once I taught you the pattern, you have to write it down and take pictures and make a book as if you were going to make a book to sell. That was the concept. All right, and this is what he did. The 1, 2, 3, swing low, pull back from swing low, price fails to make a lower swing low. Prior downtrend is over. That's the key. Then the next step would be the entries. Then, find another one. And then downtrend, would be the definition of a downtrend. And the same thing. And you'd have to do this over and over and over, write an example, then find another one that's not this one. Because I didn't want to copy the same chart 50 times. And then these would be the entry rules. All right. So this would be the 1, 2, 3. Let me see if the wedges are in here, because he in particular liked wedges. And that's what he looked for the most, because and most of these were 1 hour, 4 hour, and daily trades. And this is all the 1, 2, 3. And this looks a lot simpler than that my friend's spreadsheet.
Did he have much drawdown, do you know, Lucas? I can't see a drawdown thing on that Excel sheet either.
Well, his only drawdown would be this one loss.
No, that's a loss. I'm talking about drawdown whilst he's got the trade on.
No, we didn't put that in there. That might be interesting to know. But
anyway, he's got his stop loss in there, hasn't he?
Yeah, his stop losses were generally 1-to-1 or better. So he was never upside down on the stop.
Uh-huh.
All right, and I'll like I said, I'll drop this in the chat so you guys can look at it. And which one is this? Oh, inside bars. Gee, I forget. This is how you trade inside bars, or at least how I was teaching it.
Yeah.
Where are the wedges? Because that's the one he liked the most.
Interesting read that looks, actually.
What's that?
So that looks a very interesting read.
It is.
Let's put a lot into it.
Well, but there you look at the results.
Yeah.
Well, he's got a few of the systems in here. Oh, he's got a number of these. He's got the roller coaster. I forgot about this stuff.
We don't know that one yet.
But the wedges aren't in here. Where the hell are the wedges? Where the hell are the wedges?
I didn't see them as you scrolled through, so.
I know I have them. It may be in a different folder.
Maybe try hitting Control F and then type wedge.
Oh, let's try that. Control F. Oh, gee, I didn't know that.
No matches. Oh, there we go.
Well, the only time it mentions it, or the first
Oh.
time it mentions it, is in his trading plan.
Yeah.
And this is my questionnaire.
So yeah, if you hit enter again, it'll go to the next spot. It says there's 3 matches found.
Oh, 3? Oh, so hit enter.
Yeah. Or here, go back to the like the wedge spot. Yeah, and now hit enter.
Okay,
And
enter.
then try hit enter again. Yeah, there you go. And then one more time. Yeah, those are the 3 spots it found.
Oh, okay.
Yeah.
Okay, so it has to be someplace else.
Yeah.
But he did this detailed work with the wedges also.
Yeah.
I know he did. Because that was his favorite. Trendline basics.
Yeah.
Okay, so you know what? Before I forget, oh, now this is his trading plan. This is the other thing. I asked everyone to put together a trading plan, and these are questions I pulled from a couple of different books that I thought were important for traders to understand. All right, so this was his annual trading goal was 60,000 a year. His monthly trading goal was 5,000. His weekly trading goal was 1,250. So his daily trading goal was 25 pips on a standard account per day, which we know is doable now. Next week I want to go back to live trading. Then these are the pairs he wanted to trade, and you know you need to know all this stuff. So I don't think he would mind my sharing it. What did I change? Don't save. Okay. So first, what was that? Oh, here we go. Now, knock wood, most of the students from that era are actually doing very well. 2 of them are handling multi-million dollars accounts, which I'm kind of proud of. But here's the larger work folder. And this is like the curriculum that I would cover.
Mm.
All right. I still don't see wedges. What the hell? Trend following ADX
It's down the
channel.
bottom. It's the last one, Lou.
Oh, gee. Okay.
Mm.
It's in alphabetical order.
Yeah. Some things I'm just not that bright at. And that's okay. I make up for it in other ways. All right. So yeah, here's his work on wedges. He really liked them. That's why you see most of his trades were wedges, because he could see them. Some people, it's hard for them to see, and that's why I do the inside bar thing. You get me?
Yeah.
And all the rules are laid out. All right, let me close this. We don't need to get into all of that at the moment. I don't want to waste. Oh, fuck.
It's a beautiful job.
Excuse me?
It's a beautiful job done.
Yeah. Well, every one of the students had to do one. Otherwise, I wouldn't waste my time. You know, if they didn't want to do the work, and it wasn't complicated work. It's just learn the basics. Oh, and by the way, almost everything, just about everything there are used standard indicators. No special indicators at all. So what I want to do is close this. Don't.
So, what's on his watch list?
Oh.
What does he have in the watch
Okay.
list?
So how the watch list would work would be he'd put the pair, he'd put the time frame, and then he'd put the profile. Was it a wedge? Was it a channel? Was it a 1, 2, 3? And then he could come back to it.
So what would the profile be?
The profile would be whatever he saw. So let's say on the 4-hour chart, let's say on a pound dollar 4-hour chart, there was a wedge.
Okay.
But you can't do anything until the wedge breaks. But he can go back to his watch list and say, oh yeah, this is what I was watching. You follow me?
Yeah.
Okay. Now,
Literally, they traded every pair, any and every pair.
well, no,
They had no bias for any pairs.
you trade, and this is the rule that I had
Just
there.
trade what you see.
You trade the best looking chart. Forget the pair. Trade the best looking chart.
Mm.
You got me? So when you look back at some of this, you'll see he's got some pairs in there. A lot of us normally don't trade.
Yeah.
Let me slide this over and open this again. Journal. Yeah, like Pound Chef, Euro Aussie. This is stuff we don't normally EuroCAD, but he's looking. Wow, there's a perfect wedge on Pound Chef. That's what he would
Yen.
trade. Do you follow me?
Yeah, Swiss yen.
Right.
Mhm.
So I'm going to drop this in the chat. I got to figure out how to do this. Maybe I'll make another chat with just us in it, because I get annoyed sometimes when I post things in a room and there'll be 30 people that'll grab it. None of them will say thanks or what is it or anything. And the people that it's really designed for, sometimes I get just ticked at that. But that's a personal thing. So I may set up a Skype room with just us in it. And I can't transfer files in here, can I? And go to meeting.
I don't think so.
No, you'd probably best dump him in the room, I guess.
Yeah. All right. So then what I'll do is I'll dump it in the room. I'll leave it there for 10 minutes and then I'll cancel it. Okay.
All right.
And let the other people.
I'll have to ask Daryl to email it to me.
He
Okay.
might be able to get it this time.
All right. So
Thank you, Daryl.
I'm gonna dump this slot size calculator in the room, and I'm gonna close this, and we'll pick this up again tomorrow. All right.
Yeah,
And
thanks, Lou. Great,
it was
great day.
recorded, and it will be up and running in about 2 hours. Okay. All right. So let me do this first, and then I'll push this into the Skype. And then,
Lou, if you get time tomorrow, can you expand on what you said earlier about that 1 minute Heikin-Ashi 50 SMA?
I absolutely will.
Thank you.
I was trying to stay on point today, so that's why
Yeah,
I
no, I
didn't.
understand. Yeah,
Okay, I will definitely amplify on that.
thank you.
Okay, take care, everybody.
Bye, Luke. Thanks.
Bye.
Bye-bye.
Yes.